When buying life insurance, don't do this. My name's Gartner, this is Epic, and what we're going to get into today is the 3 things that you must know when choosing life insurance. The first thing we want to look at, or the first thing you really want to understand, is that not all life insurance companies are created equally, right? But that's actually something that we can find out pretty simply because this information is out there for us to understand. So the first thing we want to look at is how is the company rated financially? So there's a couple rating agencies that are important to look at. We want to look at first AM Best. They're one of the top raters of insurance carriers, right? We also want to look at S&P, Fitch, and Weiss, right? So that's 4 different rating agencies that could be rating financial carriers. And top tier financial carriers will actually be rated by all of them. The thing you want to really understand about those ratings is that you might hear an A+, but A+ may not be the top rating. It could be A++, right? So it's important to understand that an A-rated carrier may not be what you think it is. The other thing to understand is there's something called a Comdex rating. And that Comdex rating is a numerical number, and it's on a scale between 0 and 100. And to get a Comdex rating, you have to be rated by 2 of those rating agencies, right? So AM Best, Fitch, S&P, and Weiss, you need to have a rating by 2 of those companies. If you have an insurance carrier that has a Comdex rating of 80, that means they've scored in the 80th percentile. So they're better than 80% of those companies that are in that same rating category. But there's also companies out there that have ratings of 90, 95, even 98 we've seen on some carriers. So it's important because with life insurance, generally, we're looking for a long-term situation. And when we're looking at the long term, we want to make sure that we're choosing the right company that has great financial strength. So the second thing you want to look at is you want to make sure that you're comparing apples to apples, right? So we've just talked about financial strength, and there are companies that are kind of in the same category where they all have good financial strength. So now what we want to look at is when we're looking at the illustration or the premiums or any of these things, we want to make sure that we're comparing apples to apples. What does that mean? I want to make sure that the riders that are being listed or offered are the same. I want to make sure that the term length that the policy may last for is the same, or the amount of time I have to pay premium, is that the same? These are all really key pieces when you're trying to evaluate what's the right insurance policy for you. So this becomes especially important when you're comparing illustrations on permanent life insurance policies, right? Am I looking at an IUL versus a whole life, or am I looking at a GUL or a VUL? And we have many other videos on the channel about those different types of products. But why is it important to know that we're comparing apples to apples? Because we want to make sure that when we're looking at these things that we are looking at the exact same things. And so then we're really just comparing companies and not products. And the last thing, and this is really important when we're looking at whole life insurance policies, which is really what we're talking about today, is comparing companies solely based on their dividend that's stated. So the problem with doing that is that there is no standard for how a company reports their dividend. So there's no standardized method. So where one company may say, hey, we're 6%, and another company says we're 5%, well, that might be due to different measurements in different ways, right? It might be reported after taxes and expenses, right? Or it might be reported before. So it's very important to look at not just the dividend that's stated, but what do those cash values look like in the policy illustrations? And then the other important thing to look at is what does my guaranteed value look like? And what does my non-guaranteed value look like? And when you're looking at those 2 measures of a policy, you can keenly see that, okay, this company is doing better in this area, and this area. However, in my non-guaranteed area, maybe this other company is outperforming. And then it's a matter of, well, how much risk do I want to take in the fact that that non-guaranteed will be where it says it's going to be 20 or 30 years from now. So just to recap, right, we want to make sure that we've checked out the financial ratings of these companies. We want to make sure that when we're comparing them, we're comparing apples to apples. And we also want to make sure that we're not making our decision just based on that stated dividend, because dividends aren't guaranteed. Dividends, fluctuate from year to year. So we really want to make sure that we're doing an overall comparison on these whole life policies. There's a couple things you might be thinking. You might be thinking, great, I have a life insurance policy, but do I have the right one? Am I with a good company that is going to provide what I need, right? You may also be researching policies today because you're looking to take a step forward and actually purchase a life insurance policy. If either of those are true, what you can do is click the link below and either myself or one of the team members will reach out to you and we'll help walk you through that process to make sure you're with the right company and you have the right policy for what you're looking to do.